Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, July the 12th, 2010, and I've just spent 2.5 days without internet access. So I'm ready to go. Let's have a look at the markets. Okay, like I said, I spent 2.5 days without internet access. It died on me Friday night. Just totally fried my modem. But I'm back, and that time that I was unavailable to get online meant that I couldn't actually produce the videos that I wanted to do over the weekend, and I was unable to get to the live trading course for this morning. So that'll be continuing tomorrow mornings. We're back online now. It's cool. Let's have a look at the markets now. Starting off with the Dow Jones Industrial Average. It's a 6-month chart. Each candlestick is 1 day. I'm looking at the Dow Jones. It's the weakest of the charts that we're looking at right now. And you'll notice that today we closed to the upside. I like that. I'm a bear and I like that. Why do I like that? Because it gives us 5 consecutive days to the upside. That's better than 4 for me. I want the market to become overextended. A good growth process looks like this. Let me show it to you. All right. You like to see this kind of stuff. Da, 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 da. All right. We don't get that because bulls are being kind of stupid right now, and basically they just want to go up all the time. Okay. Well, when you do that, you get yourself overextended and it's unsustainable. All right, so that's very important for bears. We want to see that, and I hope tomorrow she continues higher. All right, give me 6 consecutive days to the upside, and if you look at this chart, you'll note that 6 consecutive up days in a row is the high end. Anything above that is above average, unsustainable, right? We talk about that all the time. That's how we were able to call this bounce, all right? We had 1, 2, 3, 4, 5, 6, 7 consecutive days to the downside. We said that's abnormal, it's unsustainable, we will get a bounce, and so that's what we got, all right? Now, a lot of guys out there looking at different indicators saying, well, I think it's time to be a bull, and another guy saying, no, it's time to be a bear. How do you make sense of it all? Well, the way I do it, it's really simple. I know all the stuff they know. You know, I can look at the same indicators they can look at the slow stocks, I can look at the price activity, I can look at the volume, we can do all this stuff. But unless you understand that certain indicators get more weight than others, then you might as well be, you're flying blind, because you have to give price activity more importance than you would the slow stocks. Okay, you have to give the volume more weight than you would the slow stocks. Okay, the volume and price are first and second in everybody's mind. All right, you got to pay great attention to those two. And if you look at the volume, we've talked about this before. Hello. What is that? That's Friday's volume. That's horrible. We haven't got Mondays on the chart yet. It's slightly better than Friday's, but still horrible. Anytime I'm looking at a chart with rallying like this, and especially if you've had 5 consecutive days to the upside and you're thinking to yourself, I need to buy in, I would never, my personal opinion, I would never, ever, ever, ever buy right here, right now. Yes, you'll probably go up. I don't care. You do not, you have to have a certain set of rules, and those rules are for me to follow smart money, do what they do. If I do my fundamental analysis right, I'm going to conclude the same thing they conclude. All right, they've got a whole team of analysts out there studying this stuff, and they're very clear to find. All right, they are bearish. They are shorting back here or here. All right, and they're not covering their shorts. Now you think retail with their little tiny weak volume is going to spook smart money and make them cover their shorts and run away and hide and cry? Not going to happen. All right. So what we're waiting for is this rally to overextend itself, and you could notice this by multiple different ways. You could notice it by reaching the overbought condition of the upper Bollinger Band line, like it did back here. Hits that green line right there. All right. You can do that. You can wait for the count to get too high. Okay, we've had 1, 2, 3, 4, 5 consecutive days. That's not above average, so it's not a big deal. 6 is the high end. So if you got 6 and 7, then you would know, wait a minute, this is too many consecutive days to the upside. It's not sustainable. Another way to do it is to simply look at the slow stocks. All right, we talked about this before. All right, right here. Once you got overbought, we told you it was time to short. Now we're watching the same condition. She's getting up there. All right, she's at 60.53. At 80, we own it. Okay. Plain and simple. I guess the number one thing to take away from this whole thing is don't buy, look for the short opportunity. All right, that'll be later this week probably. Now another item you need to be focused on. You know, you heard me talk about price, and you say, okay, well, price is going up. You've had 5 consecutive days to the upside. Why am I not a bull? You know, the price is moving up. I should be happy. I should be a bull. Wrong. Price is going down. Look at the low points. Low point here, low point here. Consecutively lower lows again and again and again. The overall trend is lower, and the bigger trend, in this case, lower is stronger than the smaller trend, the little bounce to the upside. These will fail, okay? Again and again and again. All right? Now you know what I know. Quick look at the FTSE 6-month chart. Each candlestick is 1 day. You'll notice you've got 1, 2, 3, 4, 5 consecutive days to the upside. This is the weakest chart I watch right now between the Hang Seng, the FTSE, the Dow Jones, the Nasdaq, the S&P. This is the weakest, the one with the most problems. And I would love this for a short. And if you're looking for an ETF, if you trade from the US, you're looking for an ETF that follows the FTSE, you can go to our website and look under the, I believe it's the tab titled market analysis. If you look under there, you'll find a global ETF search, and by using that tool you can find which ETF tracks the FTSE or the Hang Seng or whatever you want to trade. Okay, pretty cool little feature for you there. Now again, we've had 1, 2, 3, 4, 5 consecutive days to the upside. 7 is the high end for this market, for this chart at least. Every chart is different, and so at 5 we've had 5 to the upside, so 2 more, and it's an easy short. You also notice, we're getting really close to the 80 line. Once she gets up to the 80 line, I'll be interested. Okay, sometime this week probably. All right, awesome. Again, notice, yes, the big trend, the smart money is down, not up. Down, man. Go down and just short it. Okay. If you've not been to our free website at perfectstockalert.com, 100% free. All we ask in return, refer a friend. Yes. Also, anytime you guys want to see one of our charts, they're updated every single day on our website. All of them, Hang Seng, the FTSE, gold, you name it. Okay? Awesome. Also, if you don't mind, we'd appreciate if you'd subscribe to our YouTube channel. That helps support us, helps keep us free. We'd appreciate that, and we'll keep working our tail off for you. Very simple, very cool. Help us help you. All right, cool. Quick look at the disclaimer. The disclaimer. Read it and weep. Okay, not much more to say. I'm overly bearish and just waiting for the markets to get nice and overextended, okay? Again, this is earnings season, so the market's going to be really radical from one day to the next. So if you don't have a stomach for that, sit in cash. That's the easy way to do that, right? Right. Have a good night. God bless. Take care. Refer a friend.